Yes, my people, it's your mentor Abissons D, and I'm a full-time professional binary options trader. And in this video, I want to teach you about binary options trading. So I'm going to introduce binary options to you, especially for those people who want to start trading binary options and they don't know anything about it. So if you don't know anything about binary options, or even you know a little bit about it, this video is for you, because I want to teach you more about binary options. So make sure you watch this video to the end, especially if you are a beginner. Make sure you watch this video to the end, because I'm going to teach you about binary options step by step. Okay, so if you're watching from this channel for the first time, make sure you subscribe and turn on the notification bell, so that anytime I upload videos like this, you don't miss. You get notified as soon as I upload. Okay, yes. So also don't forget to like and share this video. Okay, so without wasting so much time, let's jump into the video. So welcome back, guys. Without wasting time, let's begin. So I'm going to teach you about binary options trading, and I'm going to tell you everything you need to know about binary options trading. So if you're a beginner, listen to this video very carefully. Okay, what is binary options? Binary options is a type of options contract in which the payout depends entirely on the outcome of a yes or a no proposition, and typically relates to whether the price of a particular asset will rise or fall in a specified period. Okay, so in binary options, we place trades with the expiry time. Okay, we have fixed duration. So we place a trade, and we also set a fixed duration, that if the duration expires, is either we get the profit or we lose the entire stake. That's how we trade binary options, and I will show you in the main platform how to do it. So stay tuned. So who are the market movers? What makes the market move? I know you as a beginner. Let me shift to the trading platform. So I know you as a beginner, you have seen something like this. Okay, this is now the market. This is the platform that we trade on. So you can see there is a green candlestick here that is moving. Okay, yeah, so that movement is caused by buyers and sellers. Okay, yeah, that movement, as you can see, the market have been moving up, and now it is moving down. So what makes it move like this? These are the buyers and sellers in this market. In this market, we have buyers and sellers. Okay, so as you can see, the green candlesticks represents buyers and the red candlesticks represents sellers. So you can see the green candlesticks, these ones are the ones representing the buyers, and the red candlesticks are the ones representing sellers. Okay, so when the market is moving up, that means the buyers are in the market, they are in control. Okay, they are the ones pushing this market higher. And when the market is falling, that means the sellers are in control, they are the ones pushing this market to the downside. Okay, yes, so we have those people in the market, and they are the ones who are making the market to move, the price to move. Okay, yes, so let's continue. So let's navigate the trading platform. Okay, so you need to understand the trading the trading platform. Okay, so what is a trading platform? A trading platform is a software interface provided by a broker to their customers to give them access as traders in the market. This may be an online web-based portal, mobile app, a standalone downloaded program, or any combination of the three. Okay, yes, so in the trading platform, like this one here is the trading platform that we use to trade on. Okay, this is the trading platform. So the broker is the one giving us access to this market through this platform. Okay, this whole platform. Okay, so now what is a broker? A broker is a financial services company that provides traders access to a platform for buying and selling assets. So the broker is the one who has created this platform for us so that we can get access to this market, so that we can be able to trade in this market through their platform. Okay, so they own this platform. Okay, so that's how brokers work. They are the ones who allow us to trade in the market through their platform. So now let's go to the platform interface. Let me bring it here. So now let's go to the platform interface. This is now the platform interface. You need to know this. You need to know about this platform, each and every corner of this platform as a beginner, so that you don't mess up. Okay, yes, so if you're a beginner and you don't know about this trading platform, then watch this video very keenly, okay, and listen to me very well. Okay, so I'm going to take you step by step, and I'm going to show you how this platform works. Okay, so now in the platform interface we have candlestick. Okay, so we have candlestick. So a candlestick is a price chart that displays the high, low, opening and closing of an asset price for a specific period. So this one here are the candlesticks. So this one here are the candlesticks, the green and the red. We have only two colors of the candlesticks, the green and the red. So the green one, I told you, represent the buyers, and the red one represent the sellers. So these candlesticks are the ones which are show us how the price move, the movement of the price. So when the candlesticks are going down, that means the price is falling, and when it is going up, that means the price is going high. Okay, the price is rising. Okay, yes. So now also they show us the closing and opening of the price. So you can see this one here, we have 27 seconds remaining for this one to close. So this candlestick opened here, it opened here, and now we don't know which side it will close, whether in red or green. Then at a certain level, like it can close here, or even higher, or down below here, or anywhere. Nobody knows the exact point that the candle will close. As you can see, it has closed here. Okay, so and the other one has opened, so it shows us when the price is opening and closing. So that's the work of candlestick. Okay, so it shows us how the price is moving, the movement of the price. Okay, so these candlesticks are the ones helping us to know how the price moves. Then we have time frame. So what is a time frame? A time frame is the period of time that a price lasts for which is displayed by the candlestick. So this candlestick is the one that display the time or the period of how the price moves, So you can see here we get the time frame setting here. This is where we set the time frame. Let me get my pen. This is where we set the what? To change the color. Yes. So this is where we set our time frame. Okay. This is where we set our time frame. So you click on that like this. Boom. Then you can see we have 5 seconds time frame to daily time frame. So this 5S means 5 seconds, 10 seconds, 15 seconds, 30 seconds. Then we have M, 2M, 1M, 2M, 3M. Those are minutes. So that one is the M is minutes, and we have H represent hour. Okay, this is 1 hour, 4 hours. Then the D represent daily. It means daily. So that's a daily time frame. So currently we are at 1 minute time frame. So that means each and every candlestick here forms after every 1 minute duration. Like you can see after every 1 minute the other candle is opening, and you can see the current one is at 40 seconds. So when 1 minute is expires, the other one opens. So if I change to 5 minutes, you can see every candlestick here forms after every 5 minutes. Whether it's small or big, it doesn't matter. It's still 5 minutes. It forms after every 5 minutes. I mean, it closes after every 5 minutes. Okay, so if I change it to 15 minutes, that means every candlestick here forms after every 55 minutes. Every candlestick here, okay, expires after every 5 minutes or closes after every 15 minutes, according to the time frame that you have set. If I put 1 hour, that means every candlestick here expires after every 1 hour. Okay, every candlestick here closes after every 1 hour, whether it is small, big, long, short. 1 hour every candle. Okay, yeah. If I set daily, or let's go to 4 hours, that means every candlestick here closes after every 4 hours. Okay, you can see this one, the current one is remaining. We are remaining with 2 hours for this candlestick to close. Okay, you can see for yourself, two good hours for this candlestick to close. Then we have a daily time frame. So this daily time frame means every candlestick here closes after every 1 day. So this one, we are remaining with 14 good hours for this candlestick to close. Then the other one will open the next day. So this one is there. We are currently here. So this one is daily. Okay. So this is today. So when this one closes, we go to the next day. Okay. Yes. So that's how time frame works. So you just set your time frame according to your strategy or what works best for you after back testing. You don't just use a time frame blindly. Okay, you practice on your chosen time frame, then you see how it works before you start trading with it. Okay, let's continue. Then we have expiry time. The expiry time is the fixed duration in which your prediction has to come true. So this is the expiry time, this one. So me, normally I use 5 minutes most of the time. Okay, according to my strategy. And if you watch my YouTube videos, you will see mostly I use 5 minutes to trade. So This is where you set the expiry time. Okay, the expiry time. So for example, if I predict that this market will go higher in the next 5 minutes, so I set 5 minutes. Then if that is after I analyze the market. So if I have if I analyze my market and see that the market is moving in an uptrend, so I look for an entry whereby if I place my trade, I know that that trade will not go down. Okay, will not come down in the next 5 minutes or maybe 10 or 20. Okay, according to what you see after analysis. Okay, yeah, so this is where you set. Just click on this one. You can place 5 seconds, 10, 15, 30, 1 hour, 1 minute, 2 minutes, blah blah, even 1 hour, 2 hours, 4 hours. Okay, yes, you are the one who will decide, but this one also goes with the time frame. If you are on a 1 minute time frame, you can use at least all time frames. Let me say all these are time expiry, but on a higher time frame, if you are on a higher time frame, you cannot use the lower expiry time. Like for example, if you are on a 15 minutes time frame, you cannot trade with 5 minutes. The time frame is bigger than your expiry time. It is not supposed to be like that. If you are on a 15 minutes time frame, you are supposed to trade with 15 minutes plus according to the time frame. If you are on a 1 minute time frame, you can use 1 minute and above, 1 minute plus. Okay, and if you are on a 15 sec or less 5 seconds time frame, you can trade with 5 seconds and above. You can also trade with 5 minutes here. Okay, at least the expiry is supposed to be the same with the time frame or higher. That's the point. But you cannot trade with a lower expiry which is lower than the time frame. That one is a very big mistake that most beginners do. Okay, yes, so now let's continue. I hope now you have understand about the expiry. Okay, so this one expiry, we use it to place trades according to the direction of the market. So if I predict now that the market will go higher in the next 5 minutes, I place my trade with 5 minutes like this, for example, like this. So if you look at this area, this is where you see how the trade is running. So you can see it is counting. We are remaining with 4 minutes 44 seconds. So if this market stay high above this my entry in the next 5 minutes, I mean for 5 good minutes, that means I will get a profit of this is how much is it? Where is it? 82% return. That means I will get a profit of 82%. Okay, so because I've invested $20, as you can see, I've invested $20. So this $20 will give me a profit of where is it? A profit of 16.40. That is 82% of $20. But if this trade, this candlestick comes down and the time expires when it is below my entry point, that means I will lose the entire $20. That is only when the expiry time, when the time expires. So right now you can see I'm in profit. Okay, you can see it is in green. You can see here I'm in profit. But When it comes below this entry point of mine, it will turn red, and it will that shows that that tells you that you will lose the entire $20. Okay, so if my predictions are right, I will get the profit only when the expiry time expires, when the price is still above my entry. Okay, but when the time expires when it is below my entry, that means I will lose the entire 20. Then there sometimes it always behave funny, like when you place the trade, the candle can normally go up down, up down, up down, up down movement. Okay, that's, we call it a pullback, because you can see it is not moving just up straight in a straight manner. It just goes and it pull back, go up, pull back, go up, pull back. So sometimes it can even pull back even down here, like up to this level. Then before the time expires, it comes back, then it closes in a profit. So when it comes down, you don't need to panic as long as the time has not expired. So there's always a hope that it will come, or it will come back up. But if you are not lucky and the time expires when it is still below, and you predicted that it will go higher in the next 5 minutes, then you will lose the entire 20. Then vice versa, same too when you sell. So when you sell, like when the market is going down like this, when you sell like this, when I went to say you sell here, the market is supposed to go down according to your prediction, but when it goes the opposite way, you will lose the entire stake that you have staked. But you will not lose your capital. Your capital will remain as it is, but only you will lose your stake. Okay, so I will talk about that one as we continue. So it will happen like that, the same way with this one, like how this one is. You can see you are remaining with 46 seconds. So you can see you will not lose your entire capital, you will only lose your stake. Okay, so let's wait for it to close. So the trade, you cannot, the other thing, you cannot cancel your trade. You need to know you cannot cancel your trade in binary options, not like forex. Okay, so if you place your trade, you just wait until it closes automatically. So this one will close automatically, and you will see my balance will increase, will add something. So let's wait and see. We are remaining with 9 seconds. 3, 2, 1, and boom. You can see the total amount we have got is 36. That is plus the return. So the return was 82%. So you can see now I have increased my capital. My balance is now 759. So I've just made a profit of $16. Okay, so that's how it works. If your predictions are right, you win a good return. But if the predictions are wrong, then you will lose the entire stake. So that's it. That's how the expiry time works. So if I put for 10 minutes, then the trade could have been running. Okay, could have been still running because I've put 10 minutes. So it depends with your strategy, or it depends with your strategy and the duration that works best for you. That's all I can say. Okay, yeah, so there are some people who trade with 1 minute duration, 2 minutes, like most gurus in the YouTube. They always trade with 1 minute. Okay, but as a beginner, I don't advise you to trade with 1 minute. Now, 1 minute is quite risky, but you can also trade with it. Many people use it and they make good money with it, but I don't recommend it to. I don't advise beginners to traded 1 minute expiry. Okay, so that's all I can say. So let's continue. So let's go to the stake. A stake. What is a stake? A stake is the amount of money that you risk from your capital in each trade. So as you can see, is the exact thing we have done here. Okay, we have placed a trade, a stake of $20 to get what? A profit of 16, that is 82%. Okay, here's my pen. So you can see we placed a trade for $20 and we got a profit of 16. So our stake is 20. So this is where you set your stake. Okay, so after setting the amount you are willing to risk in each trade, like you can trade as much as you can trade as much, you can even trade 100 times in a day if you feel like. Okay, as long as you have enough capital in your account. If you have enough capital in your account, you can risk small amount of your capital. You don't risk all of it. This is not like forex. When you put your capital in trading, all your capital is always at risk, because if you forget to put stop loss, you can lose your entire amount when the market goes the opposite direction according to your prediction. Okay, but in binary options, the capital is always safe as long as you know the amount of money you risk, okay, per trade. If you risk a lot of your capital, I mean, if you place a trade with the whole capital, that means you are willing to lose the whole money, because in this market trading is always risky, and we all know that trading is risky and losses are always involved. Let's say risk is always involved. You can win and you can also lose, so we are always be prepared. So you as a trader, you should always be prepared for that. Sometimes you can predict the market and the market goes against you, okay, but sometimes you win. But when you have the right skills, you have knowledge, you will always win. So your wins will be more than losses. Yeah, so that's how we make profit. Even as professional traders, we lose sometimes, but mostly we win. We are always right the most of the time. Okay, most of the time we are always right, because we do things the right way most of the time. Okay, exactly. So that's the stake, and I already placed a trade and we won the trade, so we got the profit. And if we had lost, we could have lost the entire 20, and the balance would have remained in the account for us to trade again and try to recover the loss. Okay, yes, so that's how stake works. This is a stake. You stake here, you can stake the amount you want. You can add, you can minus. Okay, you can add, you can minus. So that's how it works, guys. So you can even write manually. You can delete, you can even place 100 if you want, maximum 1000. You can trade with 1000. Okay, yes, so that's it. So let's continue. What is an asset? We have an asset also in this platform. So an assets are the digital instruments that we trade in the market in order to get returns, like we have done. These are the assets. Now these are the assets, these ones. So if you click here like this, you'll see these ones here are the assets. Okay, these ones are the assets. So you can choose any that you want to trade. Okay, any that, if you click this one, it will open, this one, it will open like that. And you can also add them here on top, so that you just click here, you change, you check where you can get the best opportunity to place your trade after analysis. Okay, so those are the assets we trade. we have OTC, we have crypto, we have commodities, and we have stocks. There are so many, there are many things here that you can trade. Okay, so these are always open 24/7. Then we have live currencies, forex currencies. These ones are the live currencies. So these one are two different things. We have OTCs and live currencies. Live currencies are the main currencies that we trade on in forex, but these OTCs are simulated. They are simulated assets, so they just behave the same way the live currencies do. Okay, good. So those are the assets that we trade. Okay, so what is a payout? A payout is the expected returns in percentage that a trader will receive if the trade expires in profit. So here is the payout. You can see every asset has a payout in percentage. You can see 90, 87, 82. Okay, like this one we were given 82. Okay, so every asset here has its payout. You can see payout is 89%. So that means if you place a trade in this market, if you in any stake that you invest here, like you can see in this current one, we are at USD stroke IDR. Here it is OTC. We are getting 92%. This one is a bit higher. So sometimes it goes up to 95%. So if I place a trade with $100, that means I will receive a profit of $92. That's 92%. Are you getting? So this is the payout in percentage. Okay, so that's the payout, that's the return you're going to receive after winning a trade. And remember, if you lose a trade, you will lose your own stake, the money that you risked. But if you win, you get a 92% return. That means if I invest $100, I get $92. Like we did in this one, we invested 20, we got 82% of 16. Okay, good. So that's the payout. So anytime you are trading, you make sure you check the payout that you are comfortable with, because there are also that we have also the low payouts that even me myself, I cannot choose a low payout like this one, 42%. I cannot. I can take 80 and above. Okay, so you just choose a payout that you are comfortable with. So that's the payout. Now technical tools are the tools. Okay, sorry. Technical tools are instruments that traders use to analyze the market. Okay, so now this is where we get them. Here you can get them here, and also we have indicators. Indicators are also technical tools. Okay, so you can add them like this. They help you to analyze the market. Okay, but for me, I don't use indicators. I use this one. Drawing tools is what I use the most. Okay, because I use pure price action. I don't like many things in my chart. Okay, so you can trade with this one. You can draw a zone with this one. You mark where the market reverses mostly. You can see the market reversed here. I can copy this one and also put it here. The market reversed here. Can copy this one and put it here. Sorry, here the market reversed here, it went down. So you just analyze the market like that using the tools. There are also trend lines. Okay, you can also use a trend line like this to analyze the market according to how the market behaves, the price action, how the price acts. So you need to understand all that, the market structure. The market moves in a structure, so you need to understand the market structure for you to use this kind of tools. And that is what I teach in my mentorship. Now these are the tools, the technical word. We have also horizontal line. You can also use horizontal line. You can see this is the straight line. You can also modify them. You see, you can change the color. Okay, you can modify these tools. Okay, see, you can make it thick. You can also change this one, the colors. You see, so this according to how you want them to be. Okay, yeah, so these are the tools. So if you want to delete all, boom, they disappear and you close the tab bar. Those are the tools you use to analyze the market. Okay, yes, so we have up and down button. So the up and down button are used to place trades according to the direction of the price. Okay, so if the price is going higher, you buy by pressing the up button, which is in green color, and when the price is going lower, you sell by pressing the down button, which is in red color. If you check here, this is the green and the red. Okay, green, red. So you can see even here, you can see around here. If I place my mouse here, you can see it is showing us that we are targeting higher. Okay, we are targeting higher from the place that the current price is. Then we are targeting lower. You can see the shade. Yeah. So that's how it works. So if you want to place a down trade, you place the red button. That means you are selling. And if you place an up button, that means you are buying. You are predicting that the market is doing what? It will go higher from the current price. Okay, currently we are here, this price here, this is what shows the price, this line. Okay, and the candlestick. So this one is the price, you can see here. So right now we are at 1540 something, yeah, 408, blah blah blah. So the more it go higher, you can see 154 here, 154.28. okay, 154.04 here, 154.12, 154.16. The more it go high, the more it increases. So this is the price. This is where we know the price. Okay, here this is where we check the price. So these candlesticks are the ones showing us the price movement. Okay, yeah, so you can see there is something, there is a line up there that is attached to that candle. So when the candle is moving, the line is also moving, so that it can show you the price, the current price. Okay, so you can see the more it moves, the more it changes. Yeah, so that's how what are we talking about, the up and down button. So that's how it works. If you want to buy, you press this button. If you want to sell, if you want to place a down trade, you press the red button. According to the, you can see if the red represents sellers, the green represents buyers. So what next? I think we are done. So this one here is meant the market structure, and this one is for my students who have paid for mentorship. Okay, for my beginners. So this one I will not teach here. This one is for my students. So beginners, I hope you have understand about binary options and how to trade. So this one here, you can see we have advanced strategies. This one is for my advanced students. So these are new strategies that I've created for them. So I'm going to teach them about this strategy today. So I think I should stop the video now, because we are done with beginners. We have reached at the end of the free lessons for beginners, guys. Okay, and I hope you guys have enjoyed the video, or we say the lesson. I hope you have understood. If you have any questions, you can ask the questions in the comment section. and I will answer you. Okay, ask questions concerning trading only. Don't ask just any question because you want to ask. Okay, yes. Anyway, we have come to the end of the video. If you're watching from this channel for the first time, make sure you subscribe and don't forget to like and share this video. Remember to turn on the notification bell so that anytime I upload a video like this one, an important video like this one, you get notified. Okay, you'll be the first person to be notified as soon as I upload. Okay, yes, so don't forget to turn on the notification bell. So thanks for watching this video to the end. Let's meet in the next video.